What's up, people? Hope everyone's well. Welcome back to another weekly analysis video. I've been a bit quiet on these because nothing too much has been developing from the swing perspective. As its nature as swing trading, it's not really high execution. Since the last video, we've only had 2 new positions and we've just really had development throughout the positions. I've not closed any profits. I've not closed anything at a loss. The only thing I've really done is open 2 new positions. So everyone inside the Discord has been fully active with what we've been doing, as well as all the day trading and the smaller time frames that we've been doing. But that's not what these weekly analysis videos are about. Because I've been a little bit quiet, I will throw in some day trading analysis and show you guys what we've been up to, making money on a position on day trading, and also a position that I've just entered today as a signal. So keep your eyes peeled for that. In the meantime, I'll go over the current positions. January is always pretty quiet, if not a loss, just because we're trading a trend continuation strategy, which requires a direction in the market. Often in January, the market will pretty much just move sideways within a range. As you can see, let's see if we can reflect it here on Aussie Swiss. So the start of January was, let me get on the open. The start of January was here, and the close was, well, we moved there basically. So it's hard when you're swing trading to really, with this strategy, to really trade this. Like, the market is pretty much just stayed within a range of 65 pips, you know. It just went up, then went down, then went up, and then went back down in this little square. So with this strategy, January is always pretty quiet, so nothing really out of the ordinary there. Since January, we've had a big push in the direction, because basically once all these significant news comes out within January, the market's waiting for that direction. And now it's been confirmed. What we're going to do is we're retesting that direction, just to sort of fill all the imbalances. As you can see here, we've got just big imbalances that were created. So we'll come up and fill those and then push back to the downside on this particular pair. That'll hit our TP1 at about 2.6%, 2.6R. So it's just a waiting game with swing trading. The whole point of swing trading is that it's a lot more slower paced, higher time frame. It's easier to do alongside your 9 to 5. Everyone who sort of gets into trading for the freedom aspect, and they want to quit their 9 to 5, but then they'll jump straight into intraday trading, which you can't really do alongside a 9 to 5, which you'll learn the hard way. You'll just end up missing all your entries, getting frustrated, and it's not a sustainable approach if you do have a busy life. So this is what got me into trading, and this is what got me out of my 9 to 5. You might think that, oh, if you're making 0% a month, that's bad. It's not. A lot of traders will have lost money in January because they're just over executing. But still, since this series started, we're still 17% up on the swings. So yeah, we've just had a sideways month. So that's nothing out of the ordinary. Volumes come back in the markets. February is looking a lot better. We almost just tapped TP1 there, but it's just missed it. And the positions are just developing. Plus, I do take trades on other time frames. I do take trades on other strategies, you know. Our automated strategy, which is a quantitative method, which has been coded, that's made about 30% on my risk settings in January. So, you know, it's when you get into the elite levels of trading, it's not about having everything on one strategy. It's about having multiple strategies, having them operating in a synchronized manner, running like a hedge fund, basically. So don't get too caught up in the fact that January's made 0% and this has been quiet, because you can make money elsewhere with other strategies. This is, in my opinion, is a very compatible strategy for alongside a 9 to 5 and trading on funded accounts from personal experience. So without further ado, let's kick off into the video. I'll show you how every position's progressed. So Aussie Swiss, you can see we caught it on this third tap on the 3-day time frame, literally zero drawdown. Let me hop on the 1 hour. We called the 0.585 level, and it literally tapped that, liquidated this previous high, triple top, and then dumped to the downside. Like, look how perfect of an entry that is. So we're holding zero drawdown on that, and we've held it for about a month and a half, you know. no problem at all. We knew where this was going. We had 1 touch, 2 touch, 3rd touch. We had the EMA being used as resistance, which was used as resistance previously. We've got the psychological level, which is a multiple of 50 pips there, which was also within our golden zone from this high to this low. It was also liquidating these highs and forming a triple top formation there. It was used as previous market structure, which we can see from this level there. So we knew exactly once price got to this level, it was going to reverse in the downside on the higher time frames. That's where we got in, and here's where we're at now. So this position is risk-free. What does that mean? It means the stop loss is at break even. So worst case scenario, we have a huge spike or reversal there, and we just get out of the trade with no money lost. So this is kind of like a perfect position at the moment. We're just waiting for it to hit TP1 and then TP2. Once that happens, we'll have 3.4R total. Aussie JPY, we're in this trade, waiting for it to come back up and hit TP3. In the meantime, here's a free signal. So we're waiting on 1 touch, 2 touch, 3rd touch. Basically waiting on this low to get liquidated there, which is at the psychological level 95.5. We've got the golden zone between this low and this high. So you see those confluences are lining up there. We've got the EMA, which has been used as support multiple times previously, looking for that to happen again. And yeah, pretty much waiting for this low to get tapped. We'll see how the daily price looks, but we did have a big pin bar candle from that level. So we're just waiting for price to come back down, tap us into that, and then push back off to the upside. So if we line this trade up, look something like that. We'll have the stops at 110% because it's a yen pair and TP2 there. So about a 2.9R trade. We'll bang the TP1 and TP2 on. And there we go. There's a free signal for you guys. CAD Swiss on the daily. This is a new position since the last update. So we called this zone, which is this 3rd tap. It's this EMA. It's the golden zone between this high and this low. And we do have I believe it was 643. Yeah, that's where we entered from. It was this sort of liquidity level there. We were looking to get swiped, which it did. It looks like price came up and filled this imbalance. See, it tapped it there, came back down. This didn't hit our stop loss to break even level, so we're staying mechanical and we're still in the trade. But what we have here is basically price came up to our level, filled this imbalance that was created. I believe we had some Canadian interest rate news there, so it was just price was just manipulating higher, wiping out some stops, pushed off in the right direction. Now price just needs to fill this imbalance, as you can see it's doing now, and then what will happen is price will just push off in our direction, most likely. It's not a science, it's not guaranteed to happen, but that's what's most likely to happen, so that's what we're playing. You can see as price has closed beneath the daily EMA, it's failed every single day to close above that EMA. So 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th day that price is trying to get above that EMA, and it's failed to close beneath that daily EMA every single time. What we're doing here is basically just filling this imbalance, because you can imagine that if someone has placed an order here, it's not gave them any drawdown at all, and the market makers don't like that. So say someone's got their stops at break even, or someone set a stop loss at this level, the market will just push price there to wipe out all their orders, generate enough liquidity for them to push to the downside. So still confident in this pair. Might be the case that it pushes up to stop loss and liquidates this high, significant enough to wipe us out. If it does, that's just how trading goes sometimes. You know, we're just playing the law of averages here in a wagered probability game, and we know we have an edge, so one loss doesn't matter. But in the meantime, this pair still looks promising. We had a huge confirmation here that price wants to go down. It's just sort of finding retests and wiping out stops before pushing back down. Swiss JPY, we had TP1 there, just waiting for TP2. Likelihood is that price comes down and finds some of this imbalance before pushing off to the upside. Not really looking for any re-entries at the moment, simply because the last time this EMA was tested, it did get liquidated quite a lot to fill that imbalance. We're probably looking at price coming back down to this trend line and EMA. Let me just readjust that trend line. You can see price did break beneath it once, but only for a temporary time before it get boosted back up. But I'm not looking for any re-entries right now, but I think price will probably come down to fill this imbalance, retest this trend line and EMA before pushing back to the upside. So in that case, we'll make 3.2R on the TP2. Pound Swiss on the 3-day. As you can see, 1 touch, 2 touch, 3rd touch. We've got this EMA that was used as resistance, being used as resistance again. We've got the golden zone from this high to this low. There. We've got the quarters level of 25 pips in that level. We have previous key support now being used as resistance. And price came up to our level, gave us a few daily rejection candlesticks. That's when we entered, and now price is dumping off. What's probably going to happen here? Again, price is going to fill some of these stop orders and then make its way down. So hopefully you can see by now that price doesn't move in straight lines. So it's not like you have your entry and then it just goes straight down. Price doesn't like to leave gaps in the market, so it does this sort of zigzag formation, so that if you got in here, you sort of have to have the balls for price to come against you without closing out, and then the same again, and the same again, and the same again. And the reason this happens is because the market makers need order flow. So, for example, when all the traders get stopped out on the way back up, that gives them the liquidity for price to push back lower and make even more money, basically. So, without getting too deep into order flow or liquidity, that's a summary sort of top line of how it works. But this position's looking great. Again, we had pretty much minimal drawdown before price pushed in our direction. I'd probably give it maybe a week or two and we'll see this hopefully developing further back in the trend. New Zealand JPY, we've got 2 open positions here, waiting for this one to hit TP3, waiting for this one to hit TP1 and TP2. I am looking for a re-entry on this. This EMA has been used as very strong support. We've got 1 touch, 2 touch, 3rd touch from this trend line here. What I'm looking for personally is for this imbalance to get filled all the way down there, find liquidity from here. You could say this is like an order block. Some people would say that's an order block. I'm just looking for this low to get matched, basically, which is going to happen in line with this trend line, in line with the EMA, in line with the fib level, in line with our quarters level. And we're already seeing daily rejections. So price came down. I made a huge pin bar that closed in positive gain for the day. So what we're doing is waiting for price to come back down, fill the sort of gaps in the market, and then if it does, we'll be buying in, expecting price to carry on in this uptrend that we have here. So we're basically trading trend continuation. We noticed that price is in an uptrend. We're using our confluences to find the optimal points that where price will retrace back down to before pushing back to the upside. So pretty simple what we're doing. It works. We have an edge. You can see from the previous weeks, although it was slow in January, we do have an edge. We're making money. We have an edge on the market. You know, most people spend years trying to find a system like this, even if they're just making 2% a month. So yeah, just waiting for this one to come back down, and then we might get a re-entry on this. So there's 2 signals there, AJ and NJ, that we're looking to re-enter and stack our positions. Let me just place the take profit levels. So here we have TP1. And here we have TP2. So I said it's been a bit quiet. The market was moving pretty sideways. We've now got a direction to trade from, which is good. It aligns with all our analysis. What I'll do is I'll be kind and I'll give you a day trade. So on the 8-hour time frame, we can see that we have this EMA that's been used as solid resistance. The previous trade that we took on the 31st of January, at the end of January, is we had, I think it was this trend. 1 touch, 2 touch, 3rd touch, EMA. We had this fib level on the 78.6, or I think it was 0.53, the psychological level as well. Yep, so we had psychological level, Fibonacci level, 3rd touch, EMA. We had confluence beforehand. Let's check the candles. I think I was pretty happy with this. So this was our rejection candle. It was a 4-hour doji right underneath our spot. And then our entry was basically all of the confluence as I just stated, plus this high getting wiped out. As you can see, pinpoint, came down to our TP1. Let me just clear that analysis up now, just to make it a little bit more cleaner. So price came up, tapped us in, came straight down to TP1 within a matter of a couple of days, I believe. Yep, literally the next day we hit TP1 and made 2.5R. Waiting on TP2 for that now. Since then, price liquidated that low, came back up high, and now we're looking for a re-entry. 8-hour time frame. 1 touch, 2 touch, 3rd touch. Significant high to significant low. Here's our golden zone. We have this imbalance to get filled, which is sort of like a double top. There, got an entry. Price is rejecting it straight away, forming a doji or a shooting star candle. We'll wait to see because this is the tick candle, so don't really like going off that too much because it's currently playing out, but we do have solid hourly candles showing us that price failed to close above our level, which was based off of that 4-hour imbalance there. As you can see, price failed to close above that, which is a very good sign. Shows that orders are coming into the market and pushing price beneath this. So there's a free signal for you. Take it while you can. 3rd touch, EMA resistance. We've got imbalance being filled, golden zone, and we had multiple 4-hour rejections, to be honest. We had this 4-hour spinning top, and we had this 4-hour hanging man there. Perfect. So this one's been given away to the VIP members. So be fast or be last. See how this one plays out. So there's a day trade. There's a perfect analysis. If the swing trading is too slow for you, here's how you can apply it on the smaller time frames. I generally like the 4-hour, the 8-hour, and the 12-hour for day trading. Don't really go below the 4-hour at all, apart from when I'm looking for sort of entry confirmations and stuff like that. But I won't take trades based off of them. But yeah, here's if you're complaining that the swing trading is too slow, the whole purpose of this is to give you a sort of top-down analysis so you can see my direction of where the market's going. Plus, it's a fantastic strategy to trade alongside a 9-to-5 or a busy life. And then if you want to join the VIP group and get more faster signals, such as a trade like this, where you can make 2.5R in a day, then get yourself inside the VIP group, inside the Discord, and you'll basically get all of this analysis and signals exactly when I'm placing them. But you'll also get direct mentorship and direct communication with me, basically, to answer any questions that you have about the analysis and sort of improve your trading. So thanks for watching and staying with me for this long. Hope you are staying safe in the markets, and I'll see you next week.